Hi, this is Charlie giving you Wednesday's video, recording this on Tuesday afternoon. So the title of today's video is Want to be a fund trader? Something like that, I'm sure. I'll put the title together once I've done this recording. Because a lot of people out there get into trading and then they would like to become a fund manager or a money manager at some point. It's not a bad goal to have. Not everyone's interested. Personally, I'm regulated by the FCA as a money manager, fund manager, and so I just thought I'd give you some ideas on what you need to do in order to get to that stage. So let's go through that. Let's go through a few ideas. Firstly, let's give you some bullet points on what you need to do. So if you're in the UK or anywhere really, it's FCA regulation. So if you're in the UK, then like what I've got, this is it. You've got the Financial Conduct Authority giving you, approval, so to speak, to be a money manager. You have to do it the legitimate way. There are crooks out there based in all sorts of overseas jurisdictions who don't have authority to trade, but they're in dodgy jurisdictions, and so they don't have to do anything. But yeah, if you're wanting to do it, whether it's here in Europe or wherever around the world, then get regulated. So you either go directly regulated, or you can come under. There might be some umbrella organisations that can umbrella you in to get regulated. It's difficult to go directly to the FCA. So there's lots of companies who have the full regulation, and then you can then be regulated under them. So that's something that I have to have for the fund that I have started in March of this year. We've just been building the track record for it this year. So the next thing you need to have is a track record. So traditionally, so you need to have a track record, and traditionally you need to have 3 years, 2 to 3 years, depending on who's regulating you, 2 to 3 years of accounts of trading accounts. So, and those are obviously required in order for you to get regulated. No one's going to just say, yeah, there you go, you can go and trade other people's money if you don't have some form of track record. So you have to have that. So some people out there, you might say, oh, well, I haven't got that yet. That's right. You need to build that over time. So there's no rush. If you're fairly new into trading, you might only be 2 years into trading. Would you really want to be a money manager for other people? It's quite technical. With only 2 years of experience? No, you're going to want to have several years worth of experience behind you. So use your trading on your own personal accounts as your experience building machine. So but that's traditionally what you would need. 2 to 3 years track record. Now the thing with track records is that you might be trading on, I don't know, 5,000 or 10,000 account, even a 50,000 account. That's going to be very different to trading on a fund money, where you could be trading or would be potentially trading millions under management. So do bear in mind that you're going to need to develop your trader mindset. I talk about this a lot. I'm doing this recording whilst sat in the trading room with the guys here today, and we've been talking, like we often do, talk about trader mindset. So you do have to develop a trader mindset. Just following technical analysis won't be enough for you. I can tell you that right now. You have to have a hardened trader mindset. So you may do very well with your 5,000 or 10,000 account or 50,000 account, but will you be able to handle trading millions and the much bigger lot sizes, the much bigger P&Ls that you're going to be seeing? Lots of people, I've been here with other traders in the past, who just can't handle trading the bigger amounts. And so how do you go about handling it? Develop a trader mindset. So yes, it doesn't matter if you've only got, let's say, a £5,000 or £10,000 or euro trading account, but you're going to need to develop that trader mindset. Otherwise, very quickly, you won't be able to handle the pressure, because there is a pressure with trading other people's money. if you well, I say there's a pressure. There's a pressure if you allow it to be a pressure. And this is where experience comes in. If you've only been trading a few years, have you got enough experience to be able to handle the underlying pressure? The underlying pressure is that you have a great responsibility. You are looking after other people's money. Now, don't get me wrong, there's plenty of crooks out there who do not care, and they'll just trade and trade and trade an account, try and make as much money as they can, as quickly as they can, using no stops and all the sorts of things that we've talked about lately, to try and build performance. But ultimately, they'll always blow up. So you don't want to really be doing that. So you've got to be able to be a responsible individual and understand that you owe a duty of care to your clients. Doesn't mean to say that you're always going to be able to make money for them, because that wouldn't be realistic. But most people, it's a great responsibility to look after other people's money and to have them put their trust in you. So again, all of that stuff comes down to trader mindset, and there's so many things that we can do around trader mindset to help with things like that. What else have I got here? How else do you get into it? Well, you need to have some sort of contacts, I guess. So how do you get into that side of the business? Well, you need to create some relationships or have some contacts whereby someone either says, come and trade for us, who might already have a fund, or there are other services out there nowadays where you can there's some services out there in the US, or there was a few years ago, whereby you download your accounts onto a central hub, and then fund managers will then go through that central hub and look at your accounts. And they have to be fully audited accounts, not fake ones. So they're quite aggressive on how and thorough in how they do that sort of thing. But there are these sorts of things, if you Google it, that are out there. So first and foremost, track record, and then you're going to need to get that regulation, but that might come via finding a company who will regulate you and have you under their banner. And then obviously, how do you go about raising capital? Now, sometimes these firms have already got the capital, so that's great. Otherwise, they might be giving you the regulation, but you've got to raise the capital yourself. So again, that comes under contacts. And lastly, I've already said it because I've done it about the other way around, is mindset. And that mindset covers so many things. Like I said, the mindset involving just taking trades and a much bigger size than you're used to taking. So you need to deal with that sort of thing. And of course, you can just say to yourself, well, if I risk 0.5% on my accounts, all it is still 0.5%, but it's on a much bigger account. You're absolutely right, but you start seeing those numbers, and all the theory goes out the window. So I've seen it so many times. So you have to really spend time focusing and visualizing the position sizes that you're going to be trading at, so that if you've already visualized it, it helps with you getting used to those bigger sizes, and you have to have a lot of confidence in your strategies. And also another factor is, don't think that if you're a little scalper day trader on your £10,000 account, or even your £50,000 account, that you're going to be able to do those same sorts of trades if you're trading several million, because then all of a sudden other factors come in. Your size comes into play. So the position sizing you're putting in with where maybe your little intraday stops of 10 pips, which is great on your 10,000 or 50,000 account, whatever, may not work out for you. All of a sudden you notice that you're trading on several million and you're getting stopped out more regularly. Well, that's because you've got such bigger size in the market, and it doesn't take much for the market to move 10 pips, and the market sees your stops and then starts moving towards those. So there are different types of actual trading strategies that you're going to employ when you're trading much bigger funds than when you're just trading sometimes on your personal accounts as well. So don't think, well, I'm a great little day trader, I'll just do that on a fund. If that was the case, all funds would be able to do that as well, because size does become an issue, especially if you're having tight stops. Tight stops on a few lots here and there is not going to make any difference at all. The market's not going to just come down for your stop. But if all of a sudden you've got 400 lots in the market and you've got a stop loss 10 pips away, well, you might find you're getting stopped out a bit more regularly. So there's some general advice for you there. It's very high level advice, but these are some of the features and things you need to consider. As always, do give us a thumbs up if you like this video, and also put some comments down as well. If you want to add anything, I've just gone through some general concepts here, but if you want to add anything to what I've said today, or if you've got any questions on what I've said today, I'm here to help as much as I can. So there you go. That's this week's or Wednesday's video. Hopefully you're back on Friday, but I'm in London, fun enough, seeing my regulators on Friday, so I don't know if I'll get a video out on Friday as yet or not. Anyway, ciao for now.